Imagine a world where money moves with no friction. A world where cross-border payments, bank settlements, tokenized assets, and even machine payments all run on one digital network. That idea sounds futuristic, but many people believe XRP is already being positioned for exactly this kind of global system. People who study XRP deeply don't see it as just another crypto. They see it as infrastructure. One investor explained that he spent more than a year trying to prove his XRP thesis wrong. Every day he searched for a weakness, and every day he failed to find one. For him, that was enough proof to go all in back in 2022. And even after seeing more than a 10x return, he hasn't sold. He's still averaging in because his view is long-term. He believes XRP has the potential to rise far higher as adoption grows. Now, whether someone agrees with his predictions or not, the important part isn't the number. The important part is why he believes the numbers could happen. His thesis is simple. If XRP becomes a global settlement layer, its value will be tied to global liquidity, not retail hype. And when you look at what institutions are doing lately, that idea starts to look less crazy and more realistic. Institutional conversation around crypto is changing. Big players who once ignored XRP are now openly talking about it. Some fund managers say XRP is getting closer to the same level of institutional recognition as Ethereum and Bitcoin. One reason is Ripple's own stablecoin, which is coming soon. For businesses and automation systems, a stable settlement asset linked to a fast blockchain creates major utility, and XRP's ledger already has the speed, reliability, and low cost that institutions need. This is also why huge firms like Franklin Templeton are working with Ripple in different regions. Even when Ripple faced challenges in the US, they kept building globally and institutions paid attention. Meanwhile, ETF providers quietly prepared for XRP years ago. Bitwise even reserved an XRP ticker long before the current ETF discussions began. That means the groundwork has been in progress behind the scenes. With regulations improving and the market structure bill moving forward, managers say 2025 and 2026 are the years when institutions quietly position themselves. They call these build years. When rules are fully clear, mergers and acquisitions will accelerate. Instead of creating new crypto divisions from scratch, banks might simply buy companies that already have the technology. Ripple is moving in the opposite direction, acquiring traditional finance companies to connect old systems with new ones. One of the strongest confirmations of growing interest came from a recent institutional report. It showed that XRP had consistent inflows across almost every region, something not seen in most other cryptocurrencies. In Europe, inflows into XRP were stronger than nearly all other altcoins. In the US, even the synthetic XRP product saw positive flows. While Bitcoin and Ethereum ETFs experienced large outflows that month, this kind of behavior usually signals positioning, not speculation. So then, why isn't the price exploding? Because institutions are buying mostly through OTC desks, not exchanges. OTC buying doesn't move the charts loudly, but OTC supply is limited. Once it dries up, institutions will have no choice but to buy on exchanges or from Ripple's monthly escrow, which is also limited. That's when price reactions tend to become sharp. At the same time, tokenization is becoming one of the fastest growing trends in finance. Everything from bonds to real estate to commodities is moving on-chain. Tokenization requires fast settlement rails, not speculative ones, reliable ones. That's where XRP fits naturally. Its design aligns with how financial institutions operate. Predictable, fast, low cost, and built for scale. As privacy tools improve, as public and private blockchains connect, and as banks modernize their systems, XRP is appearing more often in large institutional discussions. Not because of hype, but because its structure matches real financial needs. Right now, most of the movement is quiet. Most of the preparation is silent. Real adoption doesn't start with explosions on price charts. It starts with infrastructure, regulation, partnerships, and slow accumulation, and that's exactly what we're seeing. The real question is not about short-term price. The real question is whether you're paying attention to the bigger shift happening underneath the market. Because when the financial system moves, it moves slowly at first, then all at once. If you want more content like this, clear breakdowns, and deeper understanding of how global finance is changing through digital assets, make sure you subscribe. This is Finance Glow, and there's a lot more ahead.